Hey everyone, it's Bill Brothers, your top real estate advisor in Miami. If you're considering buying in Miami, you're probably asking, is now really the right time? Is Miami overheated? Are prices set to collapse? Or how do high interest rates, rising inventory, and new regulations impact you? In this deep dive, we'll explore how prices, interest rates, inventory, neighborhoods, buyers versus sellers, and market segments are evolving in 2025. Let's unpack what's happening and what it means for you. First up, let's talk about prices. Recent data shows Miami's housing market normalizing, but still appreciating. Redfin notes May 2025 median home prices slipped 1.5% year over year to 625,000, with homes taking longer to sell, 104 days on the market versus 80 of last year. Meanwhile, U.S. News reports Miami is trending towards a buyer's market driven by rising inventory and softening builder confidence. However, luxury sectors tell a different story. Single-family homes over $3 million saw price per square foot gain over 26%, and $10 million properties shot up 24% since last year. So what are some of the key takeaways? Mid-market single-family homes and condos are flattening and dipping slightly, but luxury homes remain strong. Next up, let's talk about interest rates. In Miami, 30-year fixed mortgages currently hover around 6.5 to 6.8%, and Freddie Mac data shows a drop from about 6.8% earlier this spring to about 6.65% in March. Economists expect rates to remain near 6 to 6.5% through the year end, potentially lowering gradually as inflation cools. That stabilization could bring new buyers off the sidelines. So here's a pro tip for you. If you're financing, it might be wise to lock in your rate now while it's trending lower, but explore buy-down strategies with sellers in this evolving market. Now let's talk about inventory. Active listings in Miami-Dade County right now peaked around 19,000 in April of 2025, the highest in 5 years, 3 times the lows of 2022 lows. Yet even so, total inventory remains slightly below pre-pandemic norms. So let's break it down for you. Single-family homes currently have about 5.8 months supply, which slightly favors sellers. Condos right now have 12.6 months supply, which clearly favors buyers. So your total is balancing out around 8 to 12 months supply, but condo market is more buyer-friendly right now. Zillow also ranks Miami among the top 20 hottest market, driven by low inventory and strong demand. So you're asking yourself, is it a buyer or a seller's market? Single-family homes are still giving sellers a slight edge with moderate inventory, faster sales, and gains in median pricing. But condos, big opportunity here. More inventory, longer marketing times, and a 7% dip in condo prices makes negotiations more favorable if you're buying a condo. So overall, Miami's market is stabilizing. For buyers, especially condo purchasers, now is a strategic window to negotiate. Sellers in the single-family sectors can still expect good outcomes, but pricing and marketing must be realistic. If you're thinking condo, be aware of heightened maintenance and assessments post Surfside. Many older buildings are rising HOA fees, which is weighing on affordability and resale value. Some developments are struggling with financing, FHA approval issues, and stricter structural safety laws, which has nudged condo prices down about 7% overall. So here's a tip for you. When evaluating condos, review HOA reserves, recent special assessments, and structural reports. Choose buildings with solid financials and maintenance plans. So where should you be looking? First, you have the Little River Edgewater area, which is affordable, growing, and selling well to investors. The Miami Beach area is seeing declines of 4 to 6% due to overdevelopment and shrinking demand. In the luxury sector, $1 million plus suburbs is still appreciating. $3 million to $6 million houses saw 26% growth on the price per square foot side. Gated single-family neighborhoods, they remain stable with slight gains and seller-friendly under moderate conditions. So let's look at the summary here. For buyers, target condos and solid buildings with starter homes in emerging areas. Investors, luxury market is still hot. And for your sellers, standout properties in single-family sectors perform best. So here's your playbook. For buyers, lock down rates or buy down. Prioritize condo inspections and reserves. Be aggressive with offers on condos and use 30 to 60-day closings. Explore starter markets like Little River or suburban single-family homes. For your investors, seek ultra luxury properties. They're record setting. Consider multifamily in under 1 million starter range that have good rental yields. Evaluate condo buildings post Surfside for discount opportunities, but verify risk profile. For your sellers, price realistically. Price per square foot above market. Work only if property is exceptional. You want to stage and market your property to stand out with digital tours, video, targeted ads. And you also want to build comps around stable single family and luxury data, not clouded condo metrics. The 12-month forecast. Modest 3% to 5% growth in prices across Florida. Miami-specific forecasts estimate 4% appreciation, especially in single-family and luxury sectors. Miami is expected to remain near the top 2 U.S. housing markets in demand based on global appeal, migration, and diversity. For buyers and sellers, stability is back. Markets are balancing, and well-researched moves will be rewarded. So, now is a well-timed moment for many buyers, especially in condos, thanks to higher inventory and better leverage. Sellers, especially with single-family and luxury homes, must calibrate their strategy and pricing for a more nuanced market. If you're thinking of buying or selling or investing in Miami, let's connect. I'll tailor a plan to your budget and goals. Like this video if it helped, subscribe for deeper market breakdowns, and tap the bell to stay ahead of Miami's fast-moving real estate scene. Drop your questions below, and I'll see you in the next video.